I love silver. I'm actually very bullish on silver. It has the potential to deliver in ways that gold cannot because of its industrial side. If we do get a buying opportunity, I know long-suffering silver bulls, they don't want another buying opportunity. They just want silver to go to the moon now. I get it. I understand. Mr. Market doesn't care, right? So if Mr. Market wrongly hands us yet another buying opportunity, I think that will be great. And I will be keenly, actively looking to add a lot more silver to my portfolio in that space. And if it doesn't happen, I'll be adding anyway. Okay. Maybe not quite so aggressively, I'll still be buying. I'll be looking for copper as well, other things. But I do think silver has a long way to go ahead of us. I don't think we're anywhere near the top of this cycle for silver or gold.
Lobo Tiggre, an investor specializing in precious metals and resources, sees a potential double top at $37 as a caution sign, but remains bullish on silver long term. He's ready to buy more if prices dip and plans to keep adding even without a pullback. Confident the bull cycle for silver and gold is far from over, with silver currently trading at $36 per troy ounce, up 24.60% year to date. The metal's strong performance reflects broader market dynamics that favor precious metals investments. With the price of silver rising now, the likelihood that demand will remain high, and the same inflation hedging and portfolio diversification benefits that gold can offer, all at a much lower price, investors may find that silver is worth a second look now. Lobo Tiggre emphasizes that silver's industrial side makes him more selective with investments. He explains that unlike gold, silver's value depends on both industrial demand and monetary factors, giving it win-win potential when conditions align. Unlike gold, which is primarily held as a store of value, silver enjoys strong industrial demand, making it a dynamic asset for investors. And in 2025, silver's story is being driven by two big forces: skyrocketing green tech demand and tight supply. This industrial component sets silver apart from its precious metal counterpart, creating multiple demand drivers that could support sustained price appreciation. However, the precious metals landscape has fundamentally changed in recent years. Lobo Tiggre warns that past charts are unreliable for today's gold market, as events since 2008 and the COVID lockdowns have pushed it into uncharted territory, breaking the usual link between gold and mining equities. Historically seen as a safe haven, gold's behavior during the COVID-19 crisis casts doubt on that role, highlighting that its effectiveness depends on the specific causes of market downturns and may weaken under certain conditions. Before we dive in, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Be part of the 2.6% who have by hitting that button and turning on the bell.
It's very dangerous to pull out your chart of what's happened in the past in uncharted waters. And we really are. What's going on right now is 2008 put us in uncharted waters. And then the COVID lockdowns, blew those, those new charts with expanded scope, blew them out of the water. Where the heck are we now? So I do think this is dangerous. And it is notable that, you'd say, oh, well, gee, that, the trickle down, has to happen, how crazy can gold go and make headlines without it trickling down? Well, gold went from 1,300 to over 2,000 and then stayed there. And then that did squat bupkis for the juniors. The trickle down thing never happened. So, well, never. I will say, as a due diligence guy and a stock picker, the better stocks did get some joy. So it's not true that gold stocks never responded to gold until recently.
Yeah.
But, and maybe that's a point worth dwelling on a little bit, because the ones that responded better, just look at the majors and what happened last year. There's one major above all that's really known for operational excellence, and that goes to all-time highs last year. And there are other majors that have political problems or operational difficulties, and they barely keep up with the GDX. This isn't rocket science. Like, this actually makes sense. And I know that you've talked to Rick about how the producers managed to turn a sevenfold increase in gold in the last big bull market into increasingly negative free cash flow. And he likes to joke that took real talent.
Yeah.
So in a world like that, and you're a serious investor, and your recency bias is that the gold producers flubbed higher gold prices, why would you rush into the stocks?
Yeah.
So in this world, I think it makes sense that there was a delay. And the producers needed to show that they could have some discipline and actually succeed at the business and not just ride on the coattails of gold. And they have. Even the ones with the operational difficulties, the political problems, have been delivering wider margins. And the trickle down is starting. And you definitely see it on some of the mid tiers, the better ones, the developers. the takeover targets. That's all happening on the junior end, even amongst the, these, as Doug Casey used to say, crappy little mining stocks. You're starting to see that rising tide stir all those ships, and the ones that have actual, discoveries, they are responding to the gold price. The ones that don't yet, not so much. And silver is a monetary metal. I like gold. I'm also bullish on copper. How can I not be bullish on silver, which combines attributes of the two?
Sure.
But its industrial side has made me not hesitant to deploy, but it has made me very picky. Like if copper was zooming and all the industrial minerals were zooming and the monetary metals were zooming, then that would be the time to say, screw it. It's just time to get on this train, right? But we're not there. And there was a lot of excitement about silver breaking out over 37. And I got Rotten Tomatoes thrown at me for saying, hey, this doesn't guarantee it's up to the moon. And then guess what? It corrects. The answer is, I love silver. I'm actually very bullish on silver. It has the potential to deliver in ways that gold cannot because of its industrial side, and that's not a bad thing. That's a good thing. It becomes the win-win metal under the right circumstances. Whereas, you could say copper and gold, maybe they're opposites. One wins at the expense of the other as industrial and monetary metals. Silver combines those two. So I'm very, very bullish, but I'm not a blind bull. And if the kinds of things that can be a headwind for copper come to pass in the near term, they're also headwinds for silver. And I got to tell you, I'm not a TA, but even I, simple, tinfoil hat Lobo that I am, I can look at a double top of silver at 37 and say, that doesn't look like an all clear signal to pile in and sell the farm, right? To go along here. Takeaway is, though, given how bullish I am going forward, if we do get a buying opportunity, I know long-suffering silver bulls, they don't want another buying opportunity. They just want silver to go to the moon now. I get it. I understand. Mr. Market doesn't care, right? So if Mr. Market wrongly hands us yet another buying opportunity, I think that will be great. And I will be keenly, actively looking to add a lot more silver to my portfolio in that space. And if it doesn't happen, I'll be adding anyway. Okay. Maybe not quite so aggressively, I'll still be buying. I'll be looking for copper as well, other things. But I do think silver has a long way to go ahead of us. I don't think we're anywhere near the top of this cycle for silver or gold.
Lobo Tiggre views Gunluck's long-term gold ownership and recent remarks as a sign that gold is moving into the mainstream. He also highlights Nassim Taleb's shift, calling gold the new reserve currency, a bold statement that underscores rising mainstream acceptance of gold's importance. This growing institutional and intellectual endorsement represents a significant shift in how sophisticated investors and thought leaders perceive gold's role in modern portfolios. The metal's exceptional performance supports this mainstream adoption narrative. Gold surged 26% in 2024 and is already up another 26% in 2025, driven by central banks' continued buying. Countries are boosting gold reserves to hedge against US dollar instability and diversify their holdings, reinforcing the metal's upward momentum. This sustained institutional demand from sovereign entities provides a fundamental floor for gold prices, while signaling a broader shift in global monetary dynamics. The convergence of mainstream investor interest and central bank accumulation creates a powerful foundation for gold's continued strength, as both retail and institutional demand streams align to support the precious metal's elevated status in the current economic environment. Let's get back to the video.
Jeff Gundlach, he owned gold for years. And he's been a little bit hotter on it, a little bit cooler on it sometimes, but he's owned it for years. So this wasn't new. So when he said, gold's not just for lunatic survivalists anymore, right. I really don't think he was trying to be insulting there. I think it was a self-deprecating remark. Like, I joke sometimes about tinfoil hat Lobo, right?
Sure.
I think that's the way he meant that because he's owned it for years. But for him to say that it's going mainstream the way he did in that Bloomberg interview, you could see the interviewer was taken aback. Like, what?
Yeah.
And the Nassim Taleb one, that was a bigger U-turn. As far as I know, he's never been a gold bug.
Right.
He's bombastic. He makes a big pronouncement. Oh, it's now the reserve currency. That's a bit of a stretch, but his point is generally right. And to your question, sorry, I kind of cut you off, but as a contrarian, when major mainstream voices start echoing your position, you have to wonder, where are we at in the cycle? And my answer to that is, past never repeats entirely. If you're in uncharted waters, it's dangerous to pull out your charts of what's happened in the past. But typically a major bull cycle ends in this blow off top, right? Where everybody's talking about it. And so if that's where this market ends, we're clearly not there yet. I don't think you were there, but I was there in the 70s, when the shoe shine boy would talk to you about gold or silver. And I was that shoe shine boy. I wasn't buying ounces of gold, but I was buying, silver rounds with my lawnmower money and babysitting money and all that stuff. So, we're nowhere near that. Where you go into a bar and everybody's talking about gold and stuff like that. We're far, far from that. And a blow off top without retail participation just doesn't seem likely. So it makes me nervous, but it's not so nervous that I'm done with gold or pivoting to something else yet. If I get into the macro and everybody asks, so where do you think gold's going? Well, you kind of, in self-defense, you have to think about these things because you can't trust what you see on the mainstream media. But so and mainstream economics, they have these huge blind spots that they refuse to acknowledge. So, for example, right now, as you ask this question, we've got the Fed guiding for higher unemployment and higher inflation. These two things aren't supposed to be possible. Their models are that economic growth comes from or results in inflation. Inflation is an indicator of economic growth. So you throttle the economy, increase unemployment to control inflation. So stagflation, that's not even possible in their models. And yet we know it's real, not just because of the 1970s. Currently, the UK and Japan are demonstrating it. So this isn't just a theoretical, academic problem. This is a real world problem that they refuse to acknowledge. And therefore, the resource investor or any investor or speculator, you have to think about these things for yourself and think, what makes sense to me? How do you know when to take profits, or how do you time the markets? And I don't know. When is gold going to roll over? I don't know. But this upside maximizer strategy, it's a mathematical approach. And I'm going to, when things roll over, my upside maximizers will be triggered and I'll sell anyway. And I don't know where the top is, but if it turns out there is a big top, that will trigger a lot of these upside maximizers. And I won't close my whole portfolio down, but I will have taken a lot of profits. I will have sold a lot of stocks. And then in hindsight, I'll say, oh yeah, that was the top. But guess what? I didn't need to know it at the time. So a strategy like that, it's basically like using a stop loss, but not to prevent losses, but to lock in gains. And there's a free report on the website, Upside Maximizer. You can look it up. Things like that, they help you sleep at night. Because instead of having to have your finger over the switch, right? The math helps.
Gold and silver remain closely aligned, rising together amid growing global uncertainty. With central banks steadily accumulating gold and silver, benefiting from its unique industrial and monetary blend, both metals offer enduring strength and protection. Their strong correlation reflects their shared role as safe haven assets and inflation hedges. As mainstream attention increases and the financial landscape shifts, gold and silver continue to stand out as vital components of a resilient investment strategy. Is silver's dual role the key to unlocking greater upside in the next bull run? Let us know your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Be part of the 2.6% who have by clicking that button and turning on the bell icon. Thanks for watching, and stay tuned for more insights coming your way.